and I'm going to bring in Gary Kaltbaum, who's a contributor on Fox Business. Gary, are you around?
Can you hear me?
Got you, buddy. All right, so you tweeted this chart to me, I think. Okay.
Yeah. Well,
All right.
first things first, you just said something that I say pretty much every day on my radio show and when I do my webcast for the peeps, and that is, you think this is easy?
Yeah.
It's a lot of work. It's a lot of focus. It's a lot of time. It's a lot of sweat. It's a lot of toil. It's a lot of questioning. But when all is said and done, if you live by a discipline that continues to work, continue with that discipline until and then adjust. And I think this is just a constant world of readjusting, especially this news-driven, crazy environment from the Fed to the White House to what we're seeing now in the Middle East. So what can I tell you?
I know you've been around for a while, Gary. Have you ever seen so many pots bubbling on the stove? I mean, we've run out of burners to put a pot on.
Well,
go ahead.
I start with what they're doing in DC with 33 trillion in debt, 2 trillion this year, and it's going to escalate even further. Major deficits. Then you have one man playing God with markets for the last few years that created all these distortions. By the way, the latest distortion, which is all on his back, is nobody's going to trade in a 3% for an 8% mortgage, so nobody's selling houses right now. That'll eventually blow up. That's all Powell. On top of that, the reason why you're seeing a Bank America stock at a new yearly low is because of the big losses they have on their books by buying long and losing their you-know-whats. And just remember, everything Powell did and the rest of them enabled Austria to do a 100-year bond at 0.8%, and it sold out, and it's down 60-some-odd% from the high. So the distortions that are out there.
Should I get out? I've been scaling in all the way down. Should I get out? I'm kidding.
Yeah,
the
gotcha.
Australian 100-year bond.
And by the way, I heard, what was he saying? The New Zealand yen? I couldn't even find New Zealand on a map, so I don't even know what to tell you there. Anyway.
It's a haven. I've talked to people, like, where do you want to be when the end game is here? And New Zealand's one of those places, but they don't let many people in. So, okay, let's look at this chart you have up here. So you're looking at a reversion to the mean here. Will they both kind of move in opposite directions to meet each other somewhere?
Well, let me say it better not revert to the mean, or the NASDAQ's going to be down a couple of thousand points from here. And look, every day, I have one screen of like Square and PayPal and F5 Networks and Fortinet and all these NASDAQ stocks that are in different levels of bear markets. I have a bunch of NASDAQ stocks that just topped out in the last 6 to 12 weeks. But the one thing that has,
one of them.
Pardon?
Amazon, one of them.
Amazon would be one. Microsoft is one. I'll go through a couple in a minute. But my main point is
Seven. Yeah.
My main point is I'm just looking at this, and I don't think I have ever seen a divergence with the breadth and advanced declines of an index versus what the index is doing. And it should be obvious why. And I say every day, they better not get the big 7. It's actually 10 stocks. Costco's in there, which is at a yearly high also. If they ever get them, look out on the NASDAQ. The question is, do one day we wake up and they put a bottom to the NASDAQ breadth and the advanced declines and all the crappy charts? Or is the other thing? And if it's the other thing, we'll be ready and we'll know, because you just said something on NVIDIA. Let's hope it doesn't go to 340. But if it does, there's your NASDAQ joining in, because I can promise you it'll be Apple also. It'll be the semis as a group. It'll be the rest of them. So you keep fingers crossed things will change. All I can tell you is it's another new low this week in the NASDAQ breadth advanced declines. And to me, it's just stunning. And the job is just to stay away from them and not lose your you know what. That's all.
Okay. All right.
Okay.
Okay.
So,
what else? So what? Go ahead. What else do you have?
This week there's 17 Fed heads speaking. I'm not making that up. The 17 speeches. You got a bunch. These are just all the wild cards. You have a bunch of the earnings. You have, of course, Israel, and my goodness gracious. And all I do is just I pay attention. Like J.P. Morgan was up 7 on Friday and finished up 2. If that's the best they can do, and that's an if, because
that was earnings too, wasn't that great earnings? And they sold into it. Okay.
Right now, if earnings right them, if the market rights itself, I think J.P. Morgan's going higher. But that's not even a point I want to make right now. So here's the main points, and I wrote them in order. The 10-year yield remains in an uptrend. Notice they've been pulling it back to the 21-day. They're holding it. It's up again. I think about 0.46 this morning. Here's your weekly on the 10-year, and very simply, let me just do a monthly. If it goes higher and breaks through 5 and 5 and into the 6s, who knows? That is the cost of capital up and down the food chain. And you know what they say? Don't fight it. And the Fed it'll be telling the Fed something also. So be watching that. Of course, the price of oil. You can see what it did off of Israel. If it keeps going higher. Here's your airlines, which, by the way, everybody was bullish in June. You know, cause and effect. So I wrote that down to show you. I had to do this also. The wonderful people on Wall Street decide to they try to start up the IPO business. And what do? They come out with asinine valuation. So here's ARM. 68 is down to 50. Here's CART. They open at 43. It's 25 and change. Birkenstock, they open that up. That was 42 and change. It's 36. So the doofuses on Wall Street trying to start up the IPO business, which is a big help to their business, decide let's be greedy out of the get-go and screw ourselves when all's said and done. And it's going to be tougher to do IPO. So I just had to mention that also because you know how
much
I
love Instacart also a failed IPO.
Here, I just showed it. Opened it at They opened it at $30 deal. Opened it at 43. Closed at 33 and change, and now it's 25 and change. So
all the insiders sold the opening and got liquid. That was their exit.
I'm sure they had some fun. Next thing I want to show, and I'm really not going to show anything good today. Look, I believe in real time. If things change, I deal with it. And believe me, every day I'm looking for better in the market. I'm looking for something I can isolate. It's something I don't have to look over my shoulder. And all I can tell you, the market's not that great when you buy something and it goes down. And you just have a lot of that. You have a lot of failed breakouts. And just in last week, you have a bunch of breakdowns, which I'll get to in a second. So here's the strength right now that should be obvious. There's your Lockheed Martin off the lows, but there's nothing I can do with it because it's fluid. I just stay away and let it move. LHX and just remember, these are in bear markets. Northrop Grumman. Yeah. So they're coming out of their slumber, but do you trust? If something good happens out of the Middle East, let's hope they come right back down. Oil prices on the move, back above the 50-day on the USO. But here's a problem with that. For every FANG, which is at new yearly highs, I have a Chevron that hasn't budged. So you got to be very specific and very particular. And if you look at the ETFs, XLE, I call it mushy. XLE, XOP, they bounced up, and the OIH, there's not much I can do with it, so I basically stay away from it. After that, I got a sprinkling.
XLE, if it ever took out 84, would have some problems.
Oh yeah, and what's funny is, I always look at Warren Buffett's been buying, it can't get out of its way. We'll see. Right now, I just call him in the middle of some range, and we'll see what happens. But as I scan, and it's easiest to be quick by doing this by going ETFs. Here's housing that just topped, and you can see the process of a bearish phase where the 50-day flattens out, now turns down, and all rallies. This is the bearish phase.
80 was the breakdown, and it rallied back to it. Right.
And here's the utilities, and just I'm just going real quick. These are all downtrends. Here's materials, some worse than others. Here's industrials, some worse than others. Don't ask me what's going on with consumer staples and things like Kellogg and Post that they basically crashed, and Hershey's. I wouldn't own them except for bounces. The transports, I'm just working. I'm looking for bull markets. The junk bonds, the HYG, the real estate, and just remember, I'm looking for bull markets, and all I'm finding is downtrends. Here's biotech, XBI. Here's retail, XRT. Here's steel, SLX. So here's the regional banks, KRE, and they better hold in here. So we're just looking
to 35.
Yeah, we're just looking for bull markets.
All right, well then put up GDX.
Well, I was about to do that last. There's your GDX. Now, I wouldn't call that a bull market yet. I would call it.
Agree.
I call it the wake up call. And
very good.
The one thing is gold seems stronger than the stocks. I want to see the stock stronger than the metal. But the definite wake up call there, and it did it without the dollar crashing.
That's right.
So should be obvious that's geopolitical, and we'll see what happens. I have some clients that own gold only because they want it. I haven't bought any yet, and we'll see what gets taken out. But my main thrust is, here is the last week, and just a little list I made. They topped, and this is before earnings. Marriott looks top now. FedEx, which was hanging in there, looks topped. There's a bunch of stocks that now look like this from last week as we go into this week. And it's worrisome because these are the things that were holding up best. PACCAR breaking the 50-day, and again, notwithstanding earnings. And then I'm just going to thumb through Airbnb. Look at these tops in place on just so many things. SAP, a very important software name. Don't break the 200-day. Here's Oracle, quite the important. These are just like all tops. And I can sit here and do a few hundred for you, but I'm not. I wish I had better things to say. I just don't. Emerging markets remain dead. Here's China. But in China, ETFs, I've got an EDU, which is strong. But I have an Alibaba that is dead money. But
so you know what you've said, one real great point, and it's like that when you trade commodities too. You could have the sector right, but not the individual stock or metal. So you have to get everything right, not just the sector, not just direction, but you have to be stock specific to get it right. Which is
especially
tough.
In commodities. With oils, I could show you a bunch of oil stocks that look like caca right now. And in the China names, you be careful. Look what they did to EDU when China didn't like the education stocks in 21. They only went down 95%. So I'm always wary of China also. And again, I can show you a drug stock like Pfizer that has been crushed, but a drug stock like Lilly on, I guess, the weight loss stuff. So there's a mixed bag, but overall, it's gross. And I
reversal.
I just have needles in the haystack as far as what I would call good charts. Meta, really good, great relative. I bought it perfectly. I had to sell it Friday because I'm not giving back all the latest buy, and great relative strength. But there's Meta, and here's just in the big names. Here's Netflix. So here's Apple that continues. Everybody loves Apple, but relative strength, and by the way, it's an 88 relative strength and the stock's done nothing. That tells you how bad the average stock is done. So
I think it's lower. Their sales aren't going too well in China. And I brought it up during the show that if you lived in a totalitarian regime and the government was only using Huawei phones and banned iPhones, would you buy an iPhone?
Yeah, it's all I can tell you is the stock no go right now, and I stay away. But my
180 was big.
My main point is I scan 1,500 stocks every night, and I do it with no bias, with my head down. I actually look at the chart first, the symbol second, even though when I look at the chart, I know what it is already. And, I can find, here's Sprouts Farmers Market, but I can, for every one of those, I can show you 50 on the other end. And all I can tell you is that be careful here. If the market is so much worse than the big indices, which takes me to the Russell.
Yeah,
and
1,400.
Again, there's your Russell, there's your S&P 500. It's just amazing stat how much the Apple, Amazon, Google, Microsoft, Nvidia, Tesla, Broadcom, we'll throw in Adobe and Costco, have an effect on those major indices. They're gargantuan. So don't know what to tell you there. All I can tell you is the average stock is that much worse. What I'm watching for with the NASDAQ is it's having trouble around the 50-day. We'll see what happens. Do not break 13,000, or that's going to tell you everything about the big guys. The NASDAQ 100 is the same, but then I just look at the Russell 2000. Yeah, I go back and forth 100 times just to make sure I'm not nuts. Here's your Dow, just channeling. It's 30 stocks, so it can get better for all we know. I just think you be cautious, be careful. And if you ever did what I did a webcast last week and showed 300 stocks that were at highs in the last 6 months, NASDAQ type things like a Redfin, and there's just a ton of this, a ton of that, and it's stunning. It humbles. It teaches you, get the heck out if you see the tops, and I'm just playing it very safe right now. I've stayed in the mega caps. I've made a little hay, not much.
So where are you parking money with your forecast on the 10-year? Are you buying any bonds in here, thinking there might be a flight to quality if we really get going to the downside?
Most of my money's in 5% money markets, and some people bought 1 and 2 years. I'm not going out long, just in case. The trend in yields is still up right now. When that changes, it'll show itself, and I'll deal with it. Also we got to watch things. If things work out in Israel, I think we can do a little better. But I got news for you. A lot of these tops in a lot of these names took place way before what's going on in Israel. And again, I can do ON. I can do hundreds of these that are in downtrends. And until the market turns into what I call a real stiff uptrend, it's just needles in the haystack. And again, there's a few names. Here's this TNET, whatever they do. But overall, yikes.
Yeah, I mean, the market basically topped late July, and now we're mid-October. So it's taken a lot of these stocks 2-3 months of distribution before they started looking ugly. And so now this is the result of what's happened over the last 90 days. August, September, October. Yeah, about
And
90 days.
one other group that's acts the security software, CrowdStrike,
Yeah,
ZS. I'm going to show a few. Palo Alto Network,
yeah, nice. Yeah.
QLYS. But just remember, if things worsen, they'll get them too. So we're just very careful. The one thing I am best at interpreting uptrends versus downtrends, and most every area except the few mentioned early downtrends, and I will be patient and wait for them to stop, turn, and then deal with it. And just right now, I just think you got to be careful, or man, oh man, it's been pretty icky.
All right, Gary, we have the drift.
Yes.
Great presentation too. Thanks for sharing your stock screen. You can follow Gary's work at Gary Kaltbaum on Twitter. Use his Twitter for some intelligence gathering. And where else can I send viewers to pay attention to what you're saying?
Well, GaryK.com. I have a thing that it's just a service where we do webcasts like this every night.
Okay.
And we don't tell you, we show you, and we provide lesson after lesson after lesson. And again, with no bias. Most important thing I can tell you, as ugly as I think things are, and not think, I know, we know that if the market decides to change, it's going to. We do not dictate to the market. We're going to let it dictate to us. So if we think in a week from now, oh, look at this, we will deal with it. We will move with it. The great line is we don't predict, we interpret. And so far, the interpretation has been like, well, my Giants played better last night, but let's call it my Mets team. So just we're just going to harp on the good, stay away from the bad, which is the plethora of stuff. Watch the 10-year, watch oil. If both keep going higher, that's trouble for earnings, trouble for profits, trouble for margins. And now earnings seasons will dictate policy, and we'll figure things out and go from there.
So Gary, you're an RIA, and that's your business model, managing money, right?
We manage money and have this little service that's really big now, where we teach, and we have funds and hedge funds as clients, and what we always tell, especially the mutual funds that follow us, if you have to be fully invested, you better be here and not here, and that's the gist of it.
Okay. And so that's open to the public. Subscription model?
Yeah, GaryK.com.
Okay, Gary K. Gary K, thanks for showing us the way today.
Good luck to everybody, and prayers to the Middle East. That's all
Yeah.
Very tough week.
Yeah. So, Gary, thanks for coming in here today and sharing your biases and your views, and always appreciate, I see things when you're here that I'm not paying attention to, and picked up a few goodies from what you were talking about today. Thank you.
But the market's up this morning. Yay.
Yeah.
Take care, my friend.
I have to go get my pom-poms, and I'll talk to you this winter, buddy.
Hopefully for better days.
All right. My trading warrior brother, Gary Kaltbaum, everybody. Follow him on Twitter at Gary Kaltbaum. Check his website out, GaryK.com. And that's a wrap for me. And you could join the team in 19 minutes on the Morning Edge. Don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.